Hello guys, today's video is another one from my trading diary series. So I'll start from discussing firstly my choice to add Pfizer to the portfolio, and later we will check how other trades went. I want to remind you that yes, this account is not public, but trades that I take on stocks are midterm trades. All are recorded, or I try at least to record for you the moment of purchasing to be more transparent, of course. This time I had to do it off the camera since I'm recording this on Saturday and markets are closed, so I had to do it prior to the recording. But I will share with you my current statement and current results so you can see yourself. And as for the other short-term trades, it would be hard to record them since I take them on random hours. The precision here is very important, so you can imagine that it would be hard to turn on the camera every time before clicking. So, but those trades are the same trades as I take on my publicly available account. You can check this account on LiteFinance social trading platform. This account is for my active trading, no experiments, and you can see all the trades in real time. So if you want to check it, you just need to check the link from the description, and that is all. If you don't, then just don't do it. Nobody is forcing you. So yeah, with that said, let's talk about the Pfizer, because after the announcement of preliminary results of research on two antiviral drugs for COVID-19, vaccine companies Moderna and BioNTech recorded immediate drops in the stock exchange valuation by 30% more or less. One of the drugs, Paxlovid, is particularly promising because its administration within 3 to 5 days from the onset of infection symptoms reduces the need for hospitalization by 89% and reduces the risk of death even more. Notably, the shares of Pfizer alone producing Paxlovid rose by 10%. Thus, the potential decline resulting from the long-term shrinking vaccine market is compensated by market participants with potential gains resulting from the potential production and sale of the first highly effective drug for COVID-19. So, this likely market is in fact a reflection of a well-known truth about the pharmaceuticals market. Drugs are simply a more profitable production than vaccines. And this is taking into account all market parameters. So, let's look at the numbers. Anti-capitalist skeptic estimate, based on Moderna's public data, that the margin on their vaccines is 69%. From a turnover of more than $6 billion, $4.3 billion is pure profit. Pfizer itself suggests that their vaccines sold about 20% cheaper than Moderna. They have a margin of approximately 30%. This data is difficult to verify, but we can as well assume that the margins are closer to the higher levels of Moderna. This level of 69% would mean that for every $20 of Pfizer income on one dose of vaccine, about $14 would remain as profit for pharmaceutical corporation. The cost of production would therefore be around $6 per dose, which is little less than the price of which Pfizer offers vaccine to the poorest countries in aid. Although Oxfam suggests that the cost of production of the vaccine is $1.30. It is based on the public aid payout and possible marginal costs. Meanwhile, marginal cost alone is not enough to produce generics. Vector vaccines, for example, sold non-profit by AstraZeneca, cost more than $2 per dose. And after far less technologically advanced than mRNA vaccines, this is evidenced by the fact that they are produced in many places around the world, while the mRNA technology has not yet been successfully cloned, even in biotechnologically advanced countries that do not respect the patent law too much. Now let's move on the calculation of the drug price. We already know that Molnupiravir, yes, produced by the Merck & Co., which is less effective than Paxlovid, will cost around $700 for the therapy. There are many indicators that the same price will apply to Paxlovid even though it is more effective. According to estimates by Harvard scientists, Molnupiravir can be produced generically for around $20. At a selling price of $700, this means a margin of 97%. $680 is left as profit for the pharmaceutical corporation. Now we can easily calculate how much profit is generated per capita. One vaccinated patient is probably $28 in profit for Pfizer in 2 doses. Meanwhile, one patient treated with a drug therapy is $680 in profit, or 28 times more. Of course, there are definitely more people for vaccination than people for treatment. How much exactly? According to the CDC data, from a purely population-based point of view, 12.5 million people could potentially, throughout the epidemic period, be hospitalized. This is about 1/26 of the US population. The potential gains from COVID-19 treatment appear similar to the potential gains from vaccine prophylaxis. At the same time, the overwhelming majority of people who are reluctant to vaccinate will take Paxlovid happily when they get sick. So we can see that the potential gains from COVID-19 treatment appear similar to the potential gains from vaccine prophylaxis. But they only seem to be. For a simple reason, the calculation should include 2 other variables, the willingness to vaccinate and the prophylaxis of drug use. The entire population cannot be vaccinated against COVID-19, as some people will refuse to do so. At the same time, the overwhelming majority of people who are reluctant to vaccinate at the time of illness will happily swallow Paxlovid, despite being manufactured by the vaccine manufacturer Pfizer, and even though it will probably be the fastest to market drug in the history of modern medicine. Anyway, when they get sick, people are ready to swallow anything, including horse medicines and bleach, so they will turn a blind eye to their skepticism towards a pharmaceutical company. There is also another extremely important factor. The antiviral drug will be administered not only to hospitalized people. It will also be given to people who might end up in the hospital. This means that the number of people taking the drug is several times greater than those who would actually be hospitalized. Not only that, the drug is being tested as a pre-infection prophylaxis after contact with an infected person. And it is almost certain that it will also work in these tests, since it works 3 to 5 days after the symptoms appear. It will probably be no different when administering this drug before the infection starts to develop. The drug is also analogous to the HIV antiviral drug that are used in this way. So in this way, the number of the patients taking the pharmaceutical will increase several times, as it will be administered to contact people, quite possibly more than once. So, and that's more than a third dose of a vaccine possibly administered. Of course, the above calculations are very general. After all, it is impossible to ignore the fact that the profitability of a given pharmaceutical cannot be measured only by its current costs, because the corporation, from the margin generated on an effective drug, has to cover huge expenses incurred on other experimental drugs that have failed. It is enough to remember that a small fraction of the drugs developed in laboratories actually end up on the market. Regardless, we can see that the drugs in general tend to be more cost-effective than vaccines. This is confirmed by the list of the most effective pharmaceutical products in 2020, of which only 2 out of 50 are vaccines. So the profitability of vaccines, especially competitive ones, is low. That, for example, in the United States, many pharmaceutical companies give them up and switch to drug development. And no wonder. Therefore, from the beginning of the epidemic, the real golden rule for the pharmaceutical corporation was the creation and sale of an effective drug. This is where real profits lie, which seems to be confirmed by the market valuation of these corporations. Pfizer will begin to cannibalize its other product by introducing its drug, and yet its market valuation is rising. So, there you have it. This is my logic behind this trade. So let's jump to the platform and check the other ones that I took throughout the days. Okay guys, so we are on the MetaTrader 4 platform, and down below you have the list of all of the trades. So you have the recent purchase, Lam Research Company, which is a semiconductor company. We discussed that in the previous video. For some time, we were having a big profit on this company, a big profit, somewhere around 150 euros. But yeah, in this recent pullback, the company made a pullback as well. But we discussed it previously. This is a semiconductor company, and we have the big demand on the products from those from this kind of businesses. So yeah, it will stay this way. The company that I left was Moderna. I closed the trade as I previously was talking about that. We will be closing this trade immediately when it will regain more or less at the break-even level. So basically, we closed the Moderna stock with a small profit. It recently, I don't know, it was a Thursday when the stock price came back towards the levels of more or less when we opened the trade. So yeah, but we know that this was a purely randomly taken trade. And we have the recent one, the Pfizer hashtag PFE. This is the ticker for this stock. And we have the date and time on 26th of November. It was opened today. We have 27th, so it was yesterday. It was on Friday, more or less in the middle of the session. So yeah, there you have it. Either way, the amount, the volume of this trade is not that big. It was 0.5%. Because you know that the lot size depends on the contract size, and it depends on the stock price, so on and so forth. So before you take a trade, you need to calculate the risk percentage. So most of them are with the 1% risk, with the 1% risk taking, because these are CFDs. These are not we can say real stocks. These are contract for difference the trades that I'm taking. And yeah, so here it is 45 lots, but if you calculate from the from my deposit, from my balance, it is 0.5%. So yeah, these are the trades that are already running. We have the standard ones: Home Depot, Nvidia, Qualcomm, Apple, Intel, 3M, Caterpillar, Inovio, which was from the another video where I discussed short-term trades, and still it didn't it didn't hit either stop loss or take profit. So I'm constantly waiting how it will turn out. We have the Visa, which is a little bit of disappointment, but yeah, due to this latest spread of COVID-19 and the possibility of new lockdowns in some areas of the world, and the we can say restrictions, so there will be less amount of people traveling, therefore less amount of less volume of foreign transactions, which we all know that it is a big chunk of Visa profit, Visa's business. So PayPal, the same situation, but it just took bigger hit since we opened the trade. It is minus 40 sorry, minus $425 more or less, excluding commission and a swap. So next we have Facebook, which is more or less constantly on the profit. Lam Research, as we discussed, and Pfizer. So as you can most likely see, we discussed also the Lam Research was let me see the chart. I need to look for it over here. I will show you what was the risk, but the risk that we are willing to take, that I was willing to take. Give me a second. Most likely I will cut this part. Okay, so we have the chart of the Lam Research, and you can see that we were buying on a resistance. So it wasn't a perfect idea to buy, but we are not day trading where we are talking about the portfolio building. We are taking the trades that we will hold for a longer period of time. Therefore, yeah, there was a risk that we will break out of this range, out of this resistance. So we are willing also to take a hit, more or less, because also that I want to discuss is the position on Nvidia, which is a bigger, we can say a bigger company, but they also deal with semiconductors, and you can see what I'm talking about. It is the best performing stock so far. So yeah, if we are looking at the overall situation, we are still 563 almost euros in profit. At one time it was almost 900. So yeah, so far so good. It is fluctuating more or less. And if we are looking at the account history, the statement, so this will include also the short-term trades. As I said, those short-term trades you can also check on the on my publicly available account. So yeah, this just doesn't include the trades from Friday, so you will have not the recent trades. These are the trades till Thursday. So yeah, so far we can say that also so far so good. We have 520 20 euros pure profit so far from all of the trades. So yeah, you can see also over here the closed transaction on Moderna. It bring us somewhere around 35 euros of pure profit. So yeah, at least we didn't end up losing any money on this trade. So I'm not planning to open any new trades on Moderna. So as I said, I choose Pfizer due to the development of highly effective drug. So we discussed that the market for vaccines will be constantly shrinking, and now there is a place for the medicines for other pharmaceuticals, and we also discussed that they are more profitable. So yeah, that is based on that. If we want to talk about the trades, maybe let's just check the trade. Okay, so let's discuss one of the trades, and yeah, let's check the Swiss franc against the Japanese yen. So yeah, I added already all the indicators that I'm using in this strategy, and yeah, most of the time I am using this one. It is a combination of the two moving averages and the CCI index. So this is a commodity channel index. So as with most of the strategies that are using moving averages, we need to have the crossover of the fastest one. Here I'm using a 10-period moving average and a 30-period moving average. So we are waiting for the crossover of the fastest one in one direction. And then we are looking for the pullback of the price and the confirmation in the CCI. So we had this example. This trade was taken on 24th of, a couple days ago. And it was over here, this one. So let's mark that. So you can see here it is the 24th of the November, around the 12 a.m. We have this candle, we have the crossover with the slowest moving average to the upside, therefore suggesting us an uptrend. We have the price pullback, even slightly below the slowest one, which is a bit of a risk signal. But either way, we had the confirmation from the CCI index when it broke below -100 and went back above -100. So this was our confirmation to enter a trade over here. So we did, and as you can see, it was the price level of where it is, price 123,410. No, sorry, opening price over here 122,945. So let me check 122,945. Or somewhere over here, and we exited 123,410. 123,410, somewhere over here. So naturally my stop loss was over here. I will just change the color of it. Why it didn't change? Okay, so this was my stop loss, and naturally I was taking 2-to-1 risk reward ratio. So yeah, that is basically it. As for the other trades, the same situation. Only on silver, on this trade, I exited at break even because the situation started to changing, and I saw that there is a potentially opposite move to begin, and I wasn't wrong because the price before falling, it went up. I was entering somewhere over here, and we had the spike to the upside before going downwards. So most likely I was right, but most likely before that I would be stopped out. So yeah, this is as you can see, it is almost before. Yeah, it happened during the American session. So yeah, I was out of the market at this point. So basically that is it for the video. Yeah, I hope you enjoyed it. Leave your suggestions down below. What are your thoughts on this series? Maybe you would like to see something else or see more details. I don't know, discuss some different things. So yeah, let me know. You can also write to me directly on the LiteFinance social trading platform. So yeah, catch me over there or in the comments. And again, thank you for watching. Until next time, guys. Take care. Bye-bye.